Good day. It's a great day. I am
Yes.
Melissa Miller, and this is Real Talk Live, where we are going to be discussing the real topics of the day, information that is important to you. And for those that are joining us live or watching later in the day, I want to say welcome, welcome. On this episode, we are going to be discussing insurance premiums. I've been getting so many calls regarding what is really going on with insurance right now. The premiums are on the rise, and many are receiving cancellation notices, and there's a lot of anxiety out there. So today we have an expert here to answer your questions, and you can be a part of this show by posting your questions in the chat. I will be looking out for any questions that you may have, so feel free to do so. And to introduce our guests for today, we have Robin Lewis, president of Robin Lewis Insurance, located on Sunrise Boulevard across from the Sawgrass Mall. He migrated to Florida from Jamaica and has been an insurance agent for over 40 years. He established Robin Lewis Insurance over 30 years ago, servicing clients in both residential and commercial properties as a trusted advisor. He's also very passionate about personal growth and development as a public speaker and coach. He is the executive director of the John Maxwell team. So welcome. Thank you for being here, Robin.
Hey, Melissa. So good to be here with you. Thank you for having me.
Yeah.
Let me just start off by saying congratulations to you. You're doing a fantastic job. I see you. Your company's growing. You're doing great in the community. And so congratulations to you on what you're doing.
Thank you so much. Thank you so much for saying that, Robin. I'm excited to have you here today, as we've been having so much, like I said, so many people reaching out to us, really concerned about the skyrocketing premiums. And we want to take this opportunity to really get an understanding about the industry. So let's start with what is going on with the insurance industry right now.
Yeah, that's funny. That's a great question. You know, it's funny. One word that we use quite a bit now describing it is chaos. Another word that we use is crazy. Essentially, what's happening is we have a really hard market right now, Melissa. Insurance carriers have been struggling to actually stay profitable.
Yeah.
Last year we had 7 carriers in the Florida market that actually are no longer around. They're out of business. And so, I mean, literally, they are out of business.
Wow.
And companies are raising rates, and a lot of carriers have stopped writing in the Florida market altogether. Those that are still writing are writing on a very limited basis. And so there is underwriting restrictions. And so they're limiting what they are writing. And so that's the chaos. We can talk a little bit about maybe what's behind that if you like, but that's kind of what's happening in the marketplace right now.
Yes. I mean, my next question is, are they in trouble? The ones that are actually still around, are they in trouble?
That's a very good question also, Melissa. There's an agency that rates insurance carriers that has said that there are other carriers there that might not be, and sorry about that. There are other carriers there that might not be. Sorry about that disturbance.
That's okay.
I thought I had closed it. So there are other carriers that might be questionable. I think through this time, as a result of the question mark out there, the majority of carriers have reaffirmed. They have gotten reaffirmed ratings, the financial ratings from these companies that rate insurance companies. So most of them are doing well. And I think a part of them wanting to continue to be strong is why they are not rushing to do business here right now. And they've also raised rates considerably to help to try and stay in good financial shape. So the majority are. I don't suspect that we will see other carriers going out right now, but you never know.
Right. I mean, I'm seeing in some cases premiums doubled. I mean, should everyone expect that their premium is going to increase, even if they, haven't received a notification yet? Should they be thinking that?
Unfortunately, yes.
Okay.
I don't see it stopping just yet, even although we probably will get a chance to talk about this. There was a new law that was signed into effect the end of the year, starting January 1 of this year, that we believe will bring reform to the insurance industry, to the property insurance market specifically. But we believe that it's going to take about a year or more for the homeowners to actually start seeing that, for the insurance carriers to see it, and then therefore it will be passed on to the consumer, to the homeowner. But
Okay.
yes, premiums continue to go up. We just got another notice from another carrier just I think it was last week, Thursday or Friday, that they're going up another 14.9%.
Wow.
And I am one of those guys, for example, the insurance guy,
Mm-hmm.
Alyssa.
Yes.
I had one of those companies on my own home that went out of business,
Oh, wow.
and we had to rewrite our policy, and our premium more than doubled. And so
Mm-hmm.
that's the insurance guy who couldn't find anything better.
Mm-hmm.
So yes, it is an unfortunate time where not everybody's getting rates doubled. Don't
Right.
misunderstand.
Okay.
But just about everybody is getting a rate increase,
Okay.
and some not so much. Yes, there are some carriers that their rates haven't gone up that much,
Mm-hmm.
and some have gone up significantly. I mean, thousands of dollars higher.
Right. I noticed that. I mean, like, what are they using to determine, who they're going to increase premiums on compared to, if they're going to double it or maybe increase it by a slight amount? Like, what are they using to determine how much they're going to increase it?
That's what I like about you're asking the right questions. You're asking the questions that people want to know about.
Yes, yes.
So for the most part, the homeowners insurance is still done on a by territory basis. So
Okay.
it's not individually rated. So, if you're getting a rate increase, it means everybody in your area is getting that rate increase from that company, right?
Okay.
No, there are some of them that have started to, and I say started maybe in the last 3 to 5 years,
Mm-hmm.
where if they have had a claim, there is a rating factor on their policy. So sometimes a claim can be a part of that increase,
Okay.
but it's a small part.
Okay.
The majority of the increases are coming because they're paying out way more than what they're collecting. That's the bottom line. Last year, I don't have the numbers for last year yet. The numbers that I have are 2020.
Mm-hmm.
The insurance companies had a $1.6 billion underwriting loss at the
Oh,
end of that year. And that resulted in an $840 million net income loss.
mm-hmm.
And so they have had these types of losses for 7 consecutive years.
Mm-hmm.
And so there's only so much and so long that the insurance company can withstand those types of losses year after year after year.
Right. Right.
So that's the main problem that's happening.
Mm-hmm.
And so when they raise the rates, they're raising the rates for that particular territory. It's not an individual rate.
I see.
Yeah.
So let's talk about that reform that you said was introduced the end of last year.
Yeah.
So the reform is addressing the premiums. What else is it addressing?
Yeah, so it's trying to get to the root cause of the problem. So I guess we do need to talk just a little bit about that.
Yeah.
I know you and I have spoken about this in the past. I'm sure you're aware, but just for the sake of your listeners, the audience today, what has happened? One of the main problems that's contributed to those major losses that I was telling you about is litigation. Florida is the capital. I mean, we are above. Well, I'll just give you some numbers to illustrate. Florida, of all the property claims that we have in Florida, it represents 8% of the claims in our nation. So if you look at the number of property claims in our nation, Florida has 8% of those claims, right?
Mm-hmm.
Yet the startling number is that we have in Florida, our great claim to fame is that we have 80% of the files in our nation that are in litigation.
Wow.
So only 8% of the claims, but yet 80% of the files that are in litigation. Last year, we had around 115,000 files in litigation. The year before, 117,000. The year before, close to that number. And what has happened is that because of these files, it's creating a whole lot more being paid out unnecessarily. I'll give you another startling number that kind of paints the picture. And from 2013 to 2020, the insurance companies paid out like $15 billion in property insurance claims in Florida, in the Florida market, right? 72% of that went to attorneys. Only 8% went to the consumer. Only 8%. And so what has happened is that, you know, they're paying out a whole lot more than what you would. And there was a loophole in the law that was put there to kind of protect the consumer, that the attorneys were taking advantage of. And I say I always have to say this because I have good friends that are attorneys. So I don't like to talk general like that. But there are some attorneys that have taken advantage of that situation. Some of them have even been, convicted of fraud. I mean, some of them have been disbarred. And so there's some out there that are just, there's bad apples in every tree, if you know what I mean.
Of course.
But what has happened is they've taken advantage of that law where it doesn't matter what happened. If they win, if they lose, there'll be no responsibility for attorney's fees. That was put in place for the consumer protection, for the consumer to not be afraid to go after the big banks and the big insurance companies, right? It's a good reason for that to be in place. But they were taking advantage of that now. The worst scenario that I've heard, again, also I think it's a good illustration to share. A friend of mine, it wasn't my case. A friend of mine who is an adjuster, an independent adjuster, told me about this file. He had a file that he was working on. It took a few years to get this claim settled. The insurance carrier paid out $30,000 for the property claim, $30,000 to get the property repaired. Right. And in that same claim, they paid out $600,000 in attorney's fees.
Right.
That's the worst case scenario that I have heard of. But it's the water damage claim that instead of it being $20,000, it's now $100,000, and you multiply that times hundreds of thousands, and you get to see where this has happened. So that's one of the things that's contributed to it. The other thing is that there's a lot of contracting scheming going on, contractor scheming. People come knocking on your doors, telling you they can get you new roofs.
Yes,
kitchens, bathrooms. Let the insurance company pay for it. You've been paying for them for all these years. Now it's time for them to come up.
Right.
It's you. And then oftentimes they get you to sign something, and what you're doing is you're signing an assignment of benefits. So you're signing all the rights of your policy over to them, and then they turn around and sue the insurance carriers, and that's a lot of that going on.
I'm glad you brought that up because there are people going door to door and doing that, and people are not aware that, that's what's going on, that they're taking advantage of the system.
Exactly.
Yeah.
And what happens is a lot of times the consumers, even if they don't want to sue the insurance company, they can't stop it because they've already signed over those rights to these people. So they really are, in some cases, taking advantage. I mean, people have no clue about what's happening. Then in addition to that, now, the other factor that's contributed is the reinsurance companies. So, Melissa, the insurance companies buy insurance so that they're not on the risk for the large claim. Let's say we have a 1 in 100-year storm come through, and which could cause significant damage. The insurance companies, the way that they're able to do insurance in Florida is by buying additional insurance. So they turn around and they buy insurance,
right?
And that's called the reinsurance. And so it means that they're not on the risk for the full amount. Right. Well, the reinsurers, because of what's been happening in Florida, have also kind of taken a step back. They're not that encouraged to want to do business here. You
Okay.
know, and with all the stuff going around all around the world, all around the world, sorry,
Mm.
a lot of these reinsurers are the same ones that, like Lloyd's of London, for example. There's a big name that a lot of people will recognize, that they insure, you know, California, they insure New York, they insure, you know, Spain. I mean, they're insuring all over the world. And
Mhm.
so all of the stuff combined is what they're looking at in terms of risk. And
Right.
so when they see what's happening in Florida, they've also been a little bit you know, cautious, and they have raised rates as well. So, like in the last 2 years, the
Mhm.
reinsurance rates have doubled,
Right.
and so this is what the insurance companies are dealing with. So, to them, it's better to not write the policy and be, you know, at a loss
Mhm.
than write it at a loss.
Right.
Kind of what's happening right now. So one of the things, that's a long story to get to the bill, because there is good news to this. It,
Yeah.
it, it really is a tremendous bill that our legislators have passed. So pat
Okay.
on the back to them. I think the word on the street is, or on the hill, as they say, is that they waited too long, right? They waited until it's become chaos and crazy,
Mhm.
but nonetheless, they have done what has been talked about as being the biggest reform in the insurance industry in the Florida market for over 50 years.
Wow.
So one of the things that they did is they did away with the one-way attorney fees. So that's now done away with. So the attorneys, if the attorney is going to sue, they have skin in the game now.
Okay.
And I say attorneys, you know, they're suing on behalf of the consumer, but a lot of times they're the ones who actually
Mhm.
are the ones that were doing it.
Mhm. Mhm.
And so that's done away with.
Right.
So the idea there now is that it prevents them, or you know, it makes it less likely that they're just going to throw claims up there to try to, thinking that rather than the insurance company, you know, fighting, they're going to settle. That no, they have to have a proper case in place before they sue,
Right.
because if they don't win, there's no there they have to cover the attorney's fees. You
Okay.
follow? And
Okay.
so that's a big part of what they have done. They've also eliminated the assignment of benefits for property insurance. And so no longer can they come and get you to sign. They even did it with water damage claims. I mentioned the roof, but sometimes you might have a water damage in your home. Your plumbing or appliances burst and leaks,
Mhm.
floods the home, and you call in somebody to come and help to dry it up and clear it up and that type of thing. And you're in good faith. They say, okay, we'll get this done for you, Mrs. Smith. Just sign here. And
Mhm.
you're signing over again an assignment of benefits.
Mhm.
And so they have done away with that now. That is no longer effective.
Okay.
So that's another. So those two things alone are great parts of the bill. There are several others that we can mention as we
Mhm.
go forward, but I'll just pause there.
And let me just point out for all the attorneys that are reaching out, you specifically said the bad apples. We're not talking about all attorneys here. We're talking about the ones that are taking advantage of the system. So,
Thank you for that, Melissa.
yes,
I have good friends that are attorneys who I love and respect and appreciate what they
yeah,
do. I have attorneys that I've had to use for
right,
my own, you know, for my own personal, you know, and
right,
business
yeah,
related cases. So, I mean,
right,
attorneys serve a good place in our society. I am not by any means
yes,
coming
right,
down on attorneys, but yes,
right.
there are some that have
Mhm.
created a significant problem for us.
Absolutely, yes. So, okay, let's talk about citizens because many times we hear that citizens is the insurance of last resort. But I've seen on several occasions where citizens quotes have actually come in lower than some of the others.
Yeah.
So, tell me what's the deal with citizens?
Yeah. You really ask good
Yeah.
questions. So yes, so citizens now, and there is a change. A part of the law includes a change with citizens, by the way. But and also I'll get to that in a moment. But
Mhm.
yes, what has happened with citizens is that they have put a cap, and this has happened for several years now. This is not new.
Right.
They've put a cap on how much they can increase their premium each year.
Mhm.
It was a 10% cap.
Okay.
And so citizens argument, if you talk to their president or chairman of the board, he would say that Citizens is not charging actuarially sound premiums.
Mhm.
In fact, um, uh, um, there is a clause in the Citizens policy that says that if we do have that big catastrophe, and there should be which creates a deficit in the Citizens surplus,
Mhm.
that they have the right to surcharge Citizens policyholders as much as 45%.
Mm.
And so that's the reason why you will see the Citizens rate in a lot of cases. It's not actuarially sound rate. So in a lot of cases, it actually is very competitive premiums.
Interesting.
But we have to be careful of that, because it's a known fact that they're not actuarially sound.
Okay.
Citizens, for the listeners, Citizens was designed to be a company of last resort.
Mhm.
And it started when Hurricane Andrew, when we had a lot of the carriers back 1992, a lot of the carriers pulled out of the state and we couldn't get insurance. And by the way, a lot of those carriers are still not writing policies in the state. So
Okay.
since 1992, they pulled out and they haven't come back in. A lot of the national carriers, I don't know if you noticed, a lot of the national carriers aren't writing insurance down there.
Right, like Allstate, State Farm, like those companies,
So
they write insurance, but not under their name.
I mean, we could just go on with the
Right.
list. Travelers. I mean, we could just go on with the list, So, and if some of them are writing, it's on a very limited basis.
Right.
So, they introduced Citizens, which back then was called the JUA, to be a company of last resort, so that if the consumer could not find home insurance, they could rely on getting a policy through Citizens. That's why it was designed. And then Citizens, became, right now, they are the largest carrier in the state. So that's not what it was designed for.
Okay.
But along the lines, one of the things that they have done is they put a cap on how much they could increase their policy. That was consumer driven to sort of provide an alternative for the consumer.
Mhm.
And but they're realizing, and they're trying to do things to increase the premiums to be more actuarially sound as we go along.
I see.
But that's what's happening.
Okay, so question, how can we get our insurance rates down, even though the insurance premiums are going up? But I know that I've had some clients that were told, okay, if you do certain things to your home and then have an inspector come back out and do an updated wind mitigation, that we can get your costs down. So how realistic is that? Like, is it going to make a difference at all?
Yes, it certainly can. So I had a customer just 2 weeks ago, had their garage door was the only door that was not storm rated.
Okay.
And they had that changed. They put on a new garage door, and so they now can get the storm shutter credits. Unfortunately, with the storm shutter credits or impact rated credits, you can only get it if all the openings are covered. It's either the door or the window meet that rating, or you have a covering that meets that rating, right?
Right.
If any one door or window doesn't have that, then you won't get the credit. So they put on the one garage door and they saved $1,000 on their insurance premium, right? And so I've seen some that save more than that. It depends on, there's a lot of other factors in terms of rating and so on, what other mitigation credits they might be receiving. Mitigation meaning, if they have any features on the home to help minimize or prevent storm damage. If they don't have any and they go and get some, they could get thousands of dollars off of their insurance premium. So that's one thing, one area to definitely look at. Let me also mention, they passed in the bill earlier last year. So I think it was July, it was signed into law. And that is where there are funds that they have made available to help people to actually mitigate their homes, strengthen their homes against storms. So I would encourage your listeners to look into that, to take advantage of that. I think it's up to $10,000 that you can get
And where do they find that information?
They would find that information. Let's see here. I'll tell you the name of the program here in a minute. It's the
Okay.
Florida. I'll tell you in a minute here.
Okay.
I'll tell you in a minute here, Melissa.
Okay. Good information to have, because anything that can bring the cost down is helpful.
Yes. So and not only that, but they can get help to do it.
Oh, good.
That's the other part of it that's really great with this now, is that they'll actually provide money, sort of a supportive funding. It's not something that they have to pay back. It's not a loan, where it can help to mitigate the home. So because they have found that those things work, right? So if you have storm shutters versus not having them, they have found that the homes hold up a lot better in a storm than the ones that don't have one, right?
Okay.
Other features that you can do to your home to help mitigate it. And so they're encouraging people to actually do that. And the insurance carriers are giving discounts, and in some cases, significant discounts for those that have those features. So that's something.
So while you're looking that up, I have Mark that is asking, will the reform bring back any companies who left Florida? That's a very good question, Mark. Thank you.
Great question, Mark. And yes, that's the whole idea. That's what we're expecting to happen. Unfortunately, that's the one that's going to probably take a little while for it to happen. One of the reasons that is that the new law goes into effect for new policies, but the policies that were already in place, it has to go through that whole year of renewal under the old policies before that will actually then start into place. And so the carriers are still faced with these issues as we go along. That's one thing. But with that being said, I have heard that there are investors that are very much interested in coming into Florida now. So I think we might actually start seeing new companies actually formed to provide alternatives in the Florida marketplace. We've seen a couple of those come up already. There's a couple of new carriers that are in the markets right now. One of them is actually writing new business, and we're hoping to see more of that happen. And so, yes, the whole idea is to attract those people back and to attract the investors, new money, if you will, into the Florida marketplace.
And that in turn will bring the rates down as well, right?
I have actually asked that question specifically to some of the CEOs and presidents of the carriers at conferences that I've attended last year. And they've all, they're always hesitant to say, reduce prices. But they've all said, yes, the main problem right now that we're having is the litigation. And if we can get that one solved, then yes, you will see rates coming down. And so I believe that they will, Melissa. That's the main problem that, we've had hurricanes for years. And yes, hurricane is a major part of the insurance premium, but we've had a handle on that, But this added stuff that's been happening is what's kind of thrown things out of kilter. And so if we can get that in order, then, the insurance companies are not here to just, take it all in and take it all in. And by the way, I forgot to tell you this. When it comes to rates, you asked about how does somebody's rate gets increased. They all have to be substantiated. So the rate increases that insurance carriers have to be approved by the state. They have to submit it to the state and justify the reason for the increase. So they don't just arbitrarily increase. They have to justify what they're increasing.
So somebody's looking at the numbers for these insurance companies, because the fact is they have been collecting premiums for years without any real losses, I would say, like you've seen in the last few years. So would you say that the losses that they've incurred pretty much wiped out all of those premiums they've been collecting for so long? Is that what happened? Or, I guess the bottom line question is the public will say that the insurance companies are just greedy and they don't want to spend money.
Yes, you hear that. I've even heard some say that they cook the books. They
Yeah.
make it look like
Hmm.
but um I'll let your listeners decide on whether they can cook the books or not. But
Right.
um yeah, it's another great question that you're asking. What happens with insurance is exactly that. They go they go a year or two or three or four or five or whatever the case might be without having any major payouts,
Mm-hmm.
and then they have the major payout that takes away a lot of the profits from the 1 or 2 or 3 or 4 or 5 years. That's kind of how insurance works.
Hmm.
We've had storms throughout the year. We had storm in 2017. We had storms last year. We had storms the year before. Maybe not in your and my area. You and I are in the same, South Florida area. But for
Right.
example, in the Panhandle area, we had Hurricane Michael, I think it was.
Hmm.
So we've had storms that have hit, and but what has happened with this in this case is that it's been consecutive years of major losses, even without the storms.
Yeah.
Consecutive years of major losses. So that's what's the problem. But yes, that's exactly what happens with insurance. That's how it works. That's why I say it's a great question, because you're revealing to people how this thing works.
Right.
What happens is that this year the insurance companies collect your premium and they don't pay anything out,
Hmm.
right? Or they pay a minimal amount out. And that might happen again next year and the third year. But then now the fourth year, they pay out $5 billion,
Hmm.
And so, so it evens out over the years.
Right.
And
Right.
one could argue, and it is true, it would be a fair argument to say that they're also gaining from investments, right? So they take the money and they're investing it as well,
Right.
right? And that's a fair statement. But the point is that taking all that into play,
Hmm.
is the in and the going out, they actually have had significant losses for several consecutive years. And the problem with it is that it was hard for them to get a handle on it, because it was just coming from nowhere. I could give you an example. One of the things that they changed in this law too, for example, is they limited. Before, you used to have 3 years to make a claim. If we have a hurricane, like we had Hurricane Irma, you remember Irma because you and I experienced Irma in our area, 2017. You had 3 years after that to actually make claims. Well, because of the fraud and all the stuff that's going on here, they're taking advantage of the litigation and so on. They had just as much or more claims filed in 2020, the last month, including up to the last month of the 3-year period, where people were filing claims. So they couldn't get a handle on that.
Right. I get
So
it.
you pay out the first year for hurricane damage, and all of a sudden, but wait,
Hmm.
next year there is another slew of claims, and then the next year there's another slew of claims, and then the next year there's another slew of claims. And so it's hard for them to really get a handle on things like that.
Hmm.
What are we really looking at here? We thought we were done with Irma.
Hmm.
Follow?
Right.
And so, but yes, it does work out where some years they're profitable and some years they're not. That part of it is not new. What the problem is right now is the several consecutive years of losing,
Right.
and a lot of it not necessarily because of storm related. There
Oh,
have been storms, but then this other factor has come into play.
okay. So talking about um, ways that we can get our premium down.
Yeah.
As far as the coverages that we might have on our policies, what is the popular coverage that we may overinsure or underinsure? Like, can we adjust some of these coverages to help with the premium costs?
Wow. And I'm
Mhm.
so afraid to speak about that one because you know how it is. You
So,
say
yeah,
one thing, you take off the coverage, and
yeah.
then next year that's the claim that you have, and you're like, oh, what is this insurance guy
Robin
telling me?
Hood.
Ah! But I understand where you're coming from though, because
Yeah,
insurance really is about managing risk. And I don't really tell people what to do. I try to
mhm,
explain it to them and have them decide.
right,
Because it's really about managing risk,
mm,
right?
right,
And so one thing to consider is a higher deductible.
Mhm.
Some people say, listen, I'd rather have a higher deductible that I would have to come up with, or in other words, they would subtract from the amount that they pay me in the event of a claim, right?
Mhm. Okay.
For the savings in my premium.
Mhm.
And they're betting on the fact that they'll save enough money to actually make up for the difference in the deductible. What if I go 5, 10 years and I don't have a claim? I'd rather keep that $500 a year in my pocket than pay it out. And if I have a claim, then I just have to pay the higher deductible. So that's one thing to look at, is having a higher deductible.
Mhm.
A lot of the policies, no, that's where we're going anyway, just because the
Yeah.
premiums are so high. But that's something to consider.
Mhm.
All the discounts, I didn't get to mention them to you. They should consider it. If you're in a gated community, a lot of times carriers will give you a credit for that. If you have, especially if it's a guard gated community, you can get discounts for that. Burglar alarm, fire alarm, if you have any of those things and they're centrally monitored, you
Mhm.
can get a discount for that.
Mhm.
Definitely consider the roof. I know it's a big cost factor, but there are one of the major underwriting factors that insurance companies use now is the age of the roof. One of the reasons is, I just mentioned to you, that's what they were targeting.
Mhm.
And so sometimes it makes the difference between which carrier we could go to, depending upon how old the roof is, number one.
Mhm.
Number two, if you have an old roof that doesn't meet the Florida Building Code and you put on a new roof that meets the Florida Building Code, you get an additional credit for that.
Mhm.
That's something to consider. I know it's a major
That's
cost.
the biggest Is that the biggest credit? The roof?
Well, it's the mitigation factors. That one that I mentioned, the Florida Building Code
Mhm.
credit specifically, is
Mhm.
not the major part of it. But
Mhm.
there are other parts of the roof. This ties in back to the wind mitigation credits.
Mhm.
For example, one of the major ones is, how well is your roof attached to the building?
Mhm.
The minimum would be a toenail. So some of them just have a nail that's attaching the roof to the nails, not a nail. Nails that are
Right.
attaching the roof to the structure. Some
Mhm.
of them actually have, wraps. So it's something that wraps around.
Single wrap, double wrap.
Correct.
Yeah, okay.
Double wrap is very strong,
Mhm.
right? And so yes, those can get you a significant savings on your policy.
Mhm.
Um, some people can retrofit their roofs to include those things. Sometimes
Mhm.
it's worth the while looking into that, because and we're getting technical here now, Melissa. I would just encourage people to reach out to an inspector who can help you with this type of thing. But
Mhm.
sometimes, you might have one nail in that wrap where it really calls for having two or three. Well, if somebody can get a person up there to get nails in that wrap,
Mhm.
then you can get a higher credit than with just the one nail, for example, right?
Mhm. Okay.
Um, and the other one is how the covering is actually attached to the roof itself. So
Okay.
that's where the roof comes in. So those things are a factor. And then the last one that I would say about the roof, which they can't really do much about, but just be aware for your knowledge. Maybe it's for some of your buyers to
Mhm.
consider this. You have a gable roof, which
Mhm.
essentially just has two angles to it. Picture a steeple. You go up one side and come down the other. That's your
Mhm.
typical gable roof.
Mhm.
And then you have a hip roof, and a hip roof has more angles than just the two, right?
Right.
It's hard for me to illustrate it, but it has more than just this.
Mhm.
And so the concept with the gable roof is that the wind can get under the gables and actually lift that roof off, right? If you get strong enough winds.
Right.
Whereas the hip roof doesn't have those edges for it to get under and blow off. And so the hip roof is stronger. So
Mhm.
so this is not something that somebody can change their gable roof into a hip roof.
No, that's
This is more for, if you're considering buying one, that's something to consider.
right.
That if you're looking at one or the other, maybe the hip roof might give you a lower cost in insurance, for example. Maybe that's a consideration.
Okay.
Um, and so that's just to be aware of that. Now, so other things that, to answer your question, back to the coverages now, one of the things that we do see a lot of people doing now is, it used to be automatic that they would, and it is recommended, right? So this is the one where I'd say, I don't want to tell people to take this off. Just, I'm going to share with you what can happen. A lot of people are doing it, but it's up to you, right? Is for the contents of their home. So the personal property, the furniture, the clothing, the TV, the stereo, that type of thing, their personal belongings. It used to be before, in the past, that only costed $75 to add on a rider that would pay you enough to replace your items with new ones.
Right.
If you have a loss, a fire, a hurricane, a burglary, water damage that causes damage or loss to your personal belongings, it'll pay you enough to go and replace them with new ones.
Right.
It's kind of automatic for $75, $100, $200, $300. Come on, that's worth it. But now, we had a company that charges $1,800 for that, $1,000 for that, wow, $800 for that, $1,200 for that. And so now that's something that people are considering, and they're saying, if they take that off, what happens is your contents, your personal belongings will still be covered. Okay. But it'll be covered less. It'll only be covered for the depreciated value of your items at the time of the loss.
I see.
So I always use an example to illustrate. Let's say you bought a TV. You bought that TV 5 years ago, and you paid $700 for that TV, right?
Right.
That same TV today, 5 years later, might only be worth what did you say?
$50.
Yeah. All right. So maybe 200. You say 50, maybe 200. But in other words, it's depreciated considerably.
Right.
That 700 might only be worth 200 or 300, right? Yeah. Or 50. I don't know. I don't think it's going to be that low, but maybe 200 or 300.
Right.
But the point is that if you take off that rider, and it's called the personal property replacement cost. That's what the rider is called, that option. If you take that off, it still covers that TV in my example. But in my example, it would only pay you the $200 or the $50,
right,
or whatever the depreciated value is for the item at the time of the loss. And they have tables that they use. And so electronics typically do depreciate pretty quickly, right?
Right.
And so each item depreciates differently. Furniture might not depreciate as much as electronics does, and so on, right? But just if you figure, so where the major problem can be is if you have a major loss. So if you have a fire that burns down your home to the ground, including all of your personal belongings, if you have a hurricane that blows through your home and takes all of your personal belongings along with it, then you have a total loss. Then if, let's say you had, $100,000 of personal belongings, without that rider, that 100,000 could drop down to you only collecting 20,000. You know what I mean?
Okay.
That's where you're going to see that major difference. It's in a major loss.
Okay.
If you just have the theft and they just steal one or two items, you're not going to see a big difference there.
Right.
And so that's why some people look at that risk and they say, well, you know what, man, this premium is so high, it's affecting my mortgage payment. If I can save $1,000 and take that off, take it off, Rob. Right. And so that's another thing that sometimes people are doing in terms of coverages.
Something to definitely consider, because you're paying, the higher premium based on furniture that might not even, unless it's some kind of special furniture, it might not be worth paying that additional premium to cover that,
Exactly.
Yeah.
Exactly right. So they have to weigh it and kind of decide,
decide for themselves. So let me ask you this, because yes, go ahead. You had another.
Yeah,
go ahead.
It was a coverage item, and in fact,
yeah, go ahead.
In fact, it's just slipping out now. Oh my goodness, it's going. Yeah. That's bad.
So while you're waiting for that to come back, let me ask you this, because this has been a concern, working with clients buying homes, and the previous owner put in a claim, and it seems to be affecting them. Can you talk a little bit about that? Because it seems like they're getting a higher premium, and sometimes they decide they don't want to move forward with that house because there was a previous claim and the insurance rate is coming up high.
Well, listen, the first thing that I want to say before I answer remember the question in case
Yeah.
I forget it, okay? In case I forget the question when I'm going to say what I'm going to say now.
Okay.
I want to come back. I want to come back and be a listener on your show, man.
Yeah.
You ask the right questions. You're asking questions with your audience in mind. That's you truly are educating them today. And I'm not tooting my horn when I say that. I'm tooting yours. I really want to come back and listen.
Robin.
To some of your other episodes. But what was the question again, Melissa?
So I was asking about, when a buyer is buying a home and they're checking around for insurance quotes, and then they're told, well, the current owner put in a claim a couple years ago.
Yeah.
So because of that, they're getting a higher insurance premium.
Yes.
So talk a little bit about that. Is that something, because I've just seen that recently in the last maybe couple years.
Yeah.
That's been affecting the new buyer.
Yeah.
So
it's a really good question. So it is a really good question. What has happened is there are a lot of claims that have been putting, just think about what we talked about earlier, and people have collected money and they have not done the repairs.
Yes.
Or they've done shoddy repairs, or they've just done enough to kind of just patch over or cover over what's taken place. It's unfortunate that this happens, but you'll be amazed to know how many times it happens. And so that's one of the reasons that the insurance companies want to know. So a lot of times, if you've had a claim in that, whether it's your claim or not, they want to know specifically what has been done, and they want to see proof what has been done in terms of the repairs. They want to see receipts, they want to see photographs, they want to see pictures, they want to see work orders. They want to know what has been done in regards to those repairs because of that reason. The other thing that they do now more than they have done in the past is prior claims has become a factor now in terms of underwriting. So some of the companies now, they look at claims on the applicant. So whether if you're coming to buy insurance and it's on house A, and you've had claims on house B and C, the applicant has had claims on other properties, they are considering those, because sometimes what they see is they see patterns, and they see that if somebody and this is a generalization again, these are people who look at numbers, so understand it's not always going to be the case,
right?
But they're finding that that person, generally speaking, is going to have more claims. And so, hey, it's about managing risk, right?
Right.
That's become an underwriting factor. And then some of them look at the property. They don't only look at the applicant, but they look at the property and what claims has the property had.
Okay.
And even though you're not the current owner, but you're now looking to buy it because it had a loss or two in the past. And the obvious reasons for that, one I mentioned earlier. The second one is they don't want to come into a place where there's just more claims waiting to happen.
Right. I see.
So that's why they have that, why they're looking at that now more. And then also they have found that people have claims and they hide them. And so what a lot of carriers are doing now, just like, we do on auto insurance, where we look up somebody's driving history, in addition to looking up their MVR, their motor vehicle report, we're also looking at what we call the clue report, where it's a central place where insurance carriers report claims.
Yes.
We want to know how many claims they have had, because that's a factor, an underwriting factor in providing them rates for the auto insurance. So the carriers are using that more now as an underwriting factor for homeowners insurance. And some people are hiding them, so they're insuring homes not knowing, or maybe the applicant themselves are in cahoots with others. I'm stating the obvious,
Right.
the obvious ones, just to make the point. They're in cahoots with some of these attorneys or contractors, and so they're just waiting to have another claim done. And so they're aware of this type of thing out there. And so their way of trying to combat this is to look at the loss history and kind of see, because it, these usually it forms a pattern.
Right.
So it's that's kind of what's happening there. It's unfortunate, but yes, they're open to, there are some legitimate things, and there can be times where the repairs are well documented and so on, that we can present a case or a file to an underwriter and ask for their consideration. And I've seen where they have made exceptions to their rule, if you will. Right. So what you find that some of them have done now, so people fully understand, is they put like a limit of claims that they can have in the last 36 months because of that, what I was telling you about. Okay. So other than acts of God, they usually don't allow. Acts of God would be things like a hurricane, as an example. Right? Not the best terminology, but nature, acts of nature, let's say. But they don't necessarily hold that against people, right? In terms of the underwriting factor. So it's other than those. So it's the water losses, it's the fire, it's the liability, personal liability suits, and so on. Those types of things. If they have a certain number of losses in the last 36 months, that's where it could disqualify them. But it's not to say if they have one, they're out. Although there are some carriers right now that one and you're out.
Wow. So what should they be doing? They got the cancellation notice. I think we were going to talk about this earlier, but should they be, what should they do?
Yeah.
Yeah.
Call their agent. Certainly. I'm an independent agent. I recommend an independent agent, but exclusive agents are just as good. The only limitation there is they only have their company. So if their company is not providing you with the best option, then they don't have any other options to offer. But sometimes that option is a really good option, right? So that's why our exclusive agents are good agents as well. But independent agents, what an independent agent can do for you as a homeowner is to shop the market for you, right? And also kind of help you put together what needs to be done to address the situation. If you're being canceled for a specific reason, then that reason needs to be addressed. And then a case presented to a potential new carrier to take it on, right? If it's just being canceled because they're reducing the exposure in the area, then what they would need to do is to put a package together to shop it around for you to the various markets. So I would say reach out to your agent, tell them what's happening, and if there is an issue that's causing the cancellation or non-renewal, try to address that situation. Right. Sometimes it might be proof of repairs. Some of the carriers now, they're actually non-renewing policies or canceling. No, in most cases, it's non-renewing policies because people haven't presented them with the proof that they've done the repairs to the property. Okay. If that's the case, in no matter where we go, you're going to need to address those repairs. So that's the first thing that you might want to try and start looking into, right? Making those repairs. Discuss with your agent what that would look like. What does proof mean? What do I have to send to them? There are different things that they'll take. So have that type of discussion. Okay. If it's just exposure management, then have a quick talk with your agent. Discuss what's happening in the marketplace. Are there carriers out there who would be looking to take your policy on? Are there things that you could do that would help you to increase the options in terms of the carriers that will provide something for you? Because maybe that's the good opportunity to do some things to actually make your home even more favorable for insuring.
Yes. Well, Robin, I don't know where the time went, but we're already at the end of the hour. Wow. And so, before
that did fly by.
Yes.
It's because of those good questions, my friend. Yes, yes, great question.
So I just want to encourage our viewers. Feel free to contact Robin Lewis. His information is at the bottom of the screen. Go ahead and write it down, take a screenshot. Robin is just a great expert on insurance, and he can guide as he has for so many of our clients. So I just want to thank Robin Lewis for always being so generous with his time and for being here on Real Talk Live today. And as always, if you need real estate assistance, you can reach out to our office at 954-388-SOLD. And please follow us on YouTube at the Sunshine Report, where we have videos about happenings in and around South Florida, business profiles, real estate information, and so much more. And remember, if you have a topic that you want to be covered on Real Talk Live, we want to hear from you. Send us a message. And thank you so much for being here, and make it a great day, everyone.
Right on. Thank you, Melissa.